How's it going, everyone? It's Sam. Today we are looking at the 5 REITs that I hold, and we're going to talk about why they're so beneficial and why I'm talking about them now, because I think now is a really important time to be looking at these. If you don't know what REITs are, they're real estate investment trusts, and they basically allow you to invest in real estate without having to buy a home or buy a duplex or invest in crowd-funded real estate projects or all that kind of stuff. They allow you to buy it just like a stock. So essentially you can look at these different companies and you invest in them. They hold real estate and they get rental income from their tenants, and then you get those paid out usually in the form of a dividend, or they reinvest back in the business to grow it out a little bit bigger and to get more rent. So it's really an interesting thing, because as I get older, I realize that there is less and less time to spend on different ventures, different businesses, but I also realize there's a lot of money to be had in real estate. So a lot of wealth is built in real estate, and a lot of us want to get into it, but either the startup cost is too high, so we don't have the money to go and invest in a rental property, or we don't have enough time, so we don't have time to go devote hours on a Sunday or a Monday or part of the week to go look for properties and buy them. Maybe it's a little bit risky too. Maybe there aren't deals in your area. Maybe you don't have the wherewithal or the knowledge to be able to kind of fix stuff up on your own. Maybe you don't have the support of one of your significant others. There are a lot of reasons why people don't get into real estate as an investment, but these companies allow you to do that, and to do it really safely and easily in the comfort of your own home by just pressing a button and hitting buy. So I will plug WeBull. If you want to use WeBull, they are one of my stock brokerage apps, and you can get 2 free stocks just for depositing $100. And you can buy these REITs on those brokerages, but I just thought I'd shout them out here. They have a nice deal right now, so I want to talk about them real quick. So getting into it, I invested in several of these REITs throughout the downturn over the last couple months, and with any kind of market downturn that comes in the future, I think it's important to revisit these REITs. And the reason I say that is there is a lot of fear in the market, especially in this sector, because we don't really know what's going to happen. So if we have to shut down again, or just even if you're watching this years from now, if there's fear in the sector, it's usually a good time to buy. So as long as people don't go out of business long term, there usually is fear priced into the stock, and then it drives the price down. And if you know anything about dividend yield, the dividend yield goes up, so you can buy a stock at a cheaper price, and if they pay the same dividend, it really increases your dividends. So I'll show you. I'm going to go over the 5 stocks that I've bought and how my dividend yield has changed even since everything happened in the economy, because it's gone up over time. First of all, I do want to shout out JT Wealth. So JT is someone that comments on this channel a lot, and she does great videos. She just did this video, top 5 REITs to buy today. I actually have 1 or 2 of the REITs that she posted about in this video. So hit the like button if you want to see REITs or see some extra finance videos. Go check her out. She's right around 200 subs, so she's growing quickly. But one of the things that she points out, and I want to hit on this before we go into each stock, is what you look for in a REIT. So a lot of the time with stocks, we look at PE ratios, so price divided by earnings ratio. And this is a good way of evaluating how expensive a stock is compared to how much they earn. But with REITs, they can be thrown off. So the reason I say this is their earnings are changed because of the fact that they can depreciate, and they also can get ownership or amortize their rental properties. So they can depreciate it, and they can get more principal pay down, and they can take taxes out. So one of the main things that you want to look for is AFFO or FFO, and it takes into account amortization and depreciation. AFFO actually doesn't take into account capital gains, but you can kind of use this instead of earnings. So this is a good thing to look at. So the first stock that I want to look at is the one that I hold the most of, and it's Realty Income Corporation. This is known as the dividend producing, or the monthly dividend company, I should say. Monthly dividend company. So as you can see here, it's really dropped off a cliff. So this is true of a lot of the different stocks on this list. It was up around $83, $84, and now it's just $58. So I bought a lot of this, or I bought into it originally when it was about $50 a share, and now it's right around 60, and it pays monthly dividends. So if you actually look on Seeking Alpha, it's really helpful. They have the price divided by the FFO. So this is kind of like price divided by earnings, and it's at 17. And if you go over to the dividends, they actually pay really good dividends. They lease out to a lot of the big companies that you would know, like Walgreens, and they have really quality tenants. But if you look here, they have a payout ratio. Payout ratios are usually pretty high for REITs, so that's normal. Don't be nervous if it's around 80 or 90% too much. The dividend yield is 4.8%, and they've been increasing this for 26 years. So I won't bore you with actually going through each of my portfolios because I hold a lot of these in multiple portfolios, but the price that I have it at is just over $1,000. That's how much I have total between my accounts. The dividend yield is 4.8% right now. The cost basis is right around 1,021. So as you can see here, my yield on cost is actually almost 0.1% higher than my dividend yield is now. So if you were to buy in now, you'd be getting less dividends per your money that you're putting in. So that means that I'm making about $50 a year in dividends just from Realty Income. So they are a company that I really like. I think that they have really high quality tenants. They have been able to increase dividends over a very long time, and it makes me really feel good about it and excited about it. They are really a cult favorite in the real estate space, and I plan on buying more of them in the future. The next stock that I want to talk about is actually a little bit in the, we'll call it the Michael Jackson space. I use that phrasing, but they buy real estate from companies that are growing products for medicinal or fun purposes, I should say, and they will go buy the real estate and lease it back to them. They are IIPR. So if you've heard about them, I've talked about them several times on the channel here, but they are a really good growth company. And as you can see here, they have a dividend of about 5%. They were up to, I think, 136 or so in stock price, but I had them lower than that. They've been growing out their dividend pretty drastically, so I apologize if you've seen me talk about them before, but I talk about the companies that I think are going to do well. So if we look at their dividend history, they've been growing it over time, and they started at just 15 cents a share, and now they're up to $1.06. I will shout out one more other YouTuber here. If you want to hear more about IIPR, one of my good friends, Logan Fisher, had a video on it about 9 months ago. A lot of it's still really relevant, but he is growing too. He's almost 500 now, but he talks about them more in depth there. Now, for them, I have a little bit less in my portfolio, but still a good amount. For IIPR, as you can see here, I have about $751 of it, and I bought it for a cost basis right under $600, so they've gone up significantly since I bought in, and I have a cost or a yield on cost now of over 6%. So that's pretty good because the dividend yield now is 4.75%. So I've been able to get in at a very good price for IIPR, and I bought a lot of them early on. My yield, or what I actually get throughout the year, is about $36 overall with all the stocks and shares that I own in IIPR. Now the next company that I want to talk about, or the next stock I should say, is actually an ETF, and it is VNQ, so Vanguard Real Estate ETF. So this is a company or a stock that I've owned since the beginning of my M1 portfolio, and this was when I really wanted to buy into something that was kind of a broad index fund. So they hold a bunch of different REITs inside of them, and they have a pretty low expense ratio, just about 0.1%, but they are held by one of the best and biggest investing companies in the world, which is Vanguard, and they hold a bunch of different REITs in them. I will say, if you're looking to invest in this, it's probably more stable than some of these other REITs because it holds a lot of other companies in it, but I think the returns aren't going to be quite as good, and the reason for that is there are going to be a lot of REITs that are kind of mismanaged, I think, or just don't do well over the next couple years because of the fact that everything is shut down and there's just uncertainty in the market. But I think they are pretty stable, so I hold some of them, but they pay out about $3.11 per share for a dividend yield right over 4%. And if we look at how much I have of them, again, they were one of my first REITs that I owned. I think they were the first REIT I owned, actually. And as you can see here, I own about $743. The dividend yield is about 4.08. Mine is about 4.19, my yield on cost, and then I get about $30 a year in dividends. The next stock that I want to talk about is a pretty risky play actually, and it's NRZ. I don't know if you've heard of NRZ, but they are a mortgage REIT. So unlike these other companies, they don't make money really from renting out their properties. They make money from the sale of mortgages, and it's honestly a pretty confusing business model. I'm not going to try to get into it because honestly, I should know more about it myself, but it's pretty convoluted and it's pretty hard to understand. So this was one of my first stocks that I invested in, and it was something that yielded a lot. So back when this started, it was yielding $2 a share, $2 in dividends a share, and as you can see here, it's only $7.14. So that would be amazing if they still did that, but they lowered it a lot. So they were about $15, $16 a share, and then everything happened in the market. I bought them maybe right when they were $12 on down. My average cost is right around $7 a share, and I was able to pick them up when they were pretty much at their lowest here. So I bought when they were $3.80. I didn't buy a lot because they were a really risky play right then. Their dividend just doubled, so it was at 5 cents a share per quarter, or 20 cents throughout the year, and it doubled to 10 cents a quarter. So right now they still have a pretty good dividend yield, but if they ever bring it close to what it was before, they'll do quite well. It'll be a very high dividend yield, but they did have to unload some of their assets, so I don't think that they'll be able to get back to that place soon, but they're a riskier play if you're looking for something with a high yield. And as you can see here, my cost basis and my price now are about the same, about $390, and they pay about 5.6% right now on their yield, so I make about $22 a year in dividends. Now the last stock on this list is a newer stock of mine, and it's probably the riskiest one here. It's SPG, or Simon Property Group. So this is a stock that was around $150. They own different malls, and they own really high quality malls, but the thing is, with everything in the market right now, it's really tough to invest in something like SPG just because there is a lot of volatility. Malls in general were kind of on the decline, but then with everything that's going on right now, it's going to be really tough to make money, I think, as a mall. But Simon Property Group is probably the best mall REIT out there, and I think that they're going to kind of transition to more entertainment soon just because people won't be shopping in stores as much. But I think that they're a company that can do that, and right now they're really cheap. So they're only about 40% of the price they were before. They still have a nice dividend yield, which I think they could definitely cut any time here. But I think that they'll bring it back and they'll do well long term. Even if they just increase to $80 a share, that's a nice return of 33%. And they are the last company that I hold here that is a REIT. And I hold less of them than every other stock. I hold about $152 worth. My cost basis is about $187, so it's gone down a little bit since I started buying in. I bought in when they were in the 80s, and now they're in the 60s. But between all the different shares, I've done quite well. The price for everything that I own now in the REITs is about almost $3,100. The cost basis is about $2,900, and I realized that this was higher, but again, the last 5 or 6 days has been really red in the market. So my yield on cost is about 5.4%, and I get about $160 a year. So I realize this might not be a lot of money to you, but for me, that's a nice little amount that I get each month. I mean, that's $15, $14 a month. So that is a nice little bit, but I really like these REITs. And not all of them necessarily in the future, but I like investing in REITs when the market's down because of the dividends that they're going to produce in the future. I think that while they might cut them now, they're going to bring them back. And I think that there's just so much fear that you can get some really nice dividends coming here in a little bit. Hopefully, if prices drop a little bit more, you can pick some of these up. But let me know what you guys think below. Let me know your comments and what you're looking for in the next kind of dip in the market. I'd be curious if you have bought any of these REITs, and I'd love to hear about it. So again, please hit the like button right below this video right there. And if you do want those free stocks, you can go down and deposit $100 with WeBull, and I will see you in the next video. Thanks, guys.